Hi, you're watching Investor Insights, and in this video I'd like to talk about my favourite topic. It's inflation. Now inflation, to most people, is simply the rise in the cost of goods and services over a period of time. Some of the older definitions of inflation are just simply an increase in the money supply. Makes perfect sense. You got more money out there chasing a fixed number of goods and services, so therefore the bid goes up on those items, and therefore you have a gradual rise in price given in any length of time. What people don't realize is inflation is the key to a lot of fiscal and monetary policy. What a lot of people don't realize is that inflation should be one of the biggest consideration before you make any sort of investment or before you take a trading position, because it governs everything. Inflation runs the show. And as I stated earlier, people don't think about that. Now, the main question that you're going to be asking is, why is inflation so important? I mean, things are always going to go up. But you're going to be asking yourself, why are things going up? And what is the rate of things going up? If you don't take that into account in your daily transactions or in your major investing decisions, man, you are not keeping your eyes on the ball. You are going to get into a lot of trouble if you're discounting inflation in your important financial decisions. You can look at inflation in relation to things like economic growth. Now, there's two terms out there. One is nominal growth and the other being real growth. And this applies to everything, whether it be the economy or stocks, real estate, whatever it is. Nominal growth is simply the numbers that the statisticians provide as to how things have grown. It's very simple. So most data release points are more nominal growth. So for example, if you hear about GDP's expanded 1.7% year on year, which is what happened last week over in the States, then basically an economy has basically grown, as the data suggested, just under 2%, which is superb for their zombie economy over there. But it doesn't take into account inflation. Now inflation, the Fed claims is, I don't even look at what they claim the inflation to be. I mean, it's a joke in Australia. It's going to be an even bigger joke over there because we are not printing money, keeping rates low by buying our own bonds and distorting the markets. And Australia is a pretty good country to live in. Unless you're a housing investor, you're about to get killed. Anyway, when real inflation is going to hit and they realize that inflation is not running at their stated 1 or 2%, then technically the country is in essence in a real recession. Because when you start to take inflation into account, then you get to the real number. So nominal means the stated number, and the real number is the stated number minus the rate of inflation. So if the stated GDP growth was 1.7% and inflation is running at 2%, it means that the real economy out there has actually contracted by 0.3%. And this is where people don't think about inflation. In Australia, our year-on-year inflation rate through the CPI is 2.4%. Absolute load of bull manure. Petrol itself has gone up easily 20% at the Bowser just in the past 2.5 months. And as you know, oil prices affects everything. I've made probably 10 videos talking about, some people say I'm ranting about inflation. It doesn't matter. I cannot stress enough the importance of inflation being the runner of everything. If you have economic growth in the States at 1.7%, and they put out the real inflation numbers, and that's going to be probably closer to maybe 5, 8, 10%, then the economy is actually contracting anywhere up to 8% a year. Now that's a disaster. And what people don't think about is that the Fed's balance sheet is increasing at $85 billion a month. Man, how that doesn't stoke inflation, I will never know. But inflation will be the killer. There's going to be a point where you can't hide inflation anymore. When you see petrol at the Bowser in this country at over $2 for anything, for E10 or unleaded, and the government still wants to come out and say, oh, inflation's running at 2.5%, it's okay, we'll keep on cutting rates, you're going to see an upheaval. People will just wake up from this fairy tale land of growth, high growth, and low inflation. It doesn't happen, especially when you've got loose monetary policy through the RBA is doing it through lower rates, or the Fed's doing it through bond purchases and real estate mortgage purchases. Man, they are distorting the markets. Every market out there. And inflation is not being taken seriously. The regulators, the policymakers, the central bankers, they know that inflation is rife. But because the whole world is slowing down, real growth is probably negative, including that of China. How can you invest in stocks at such high levels with low yields? You've got high inflation. The stated inflation is a lie. Don't believe what they're telling you. Inflation will be the one biggest governing factor over the next year, maybe 2, maybe 3 years. You're going to see a lot of things unwind because inflation is going to take hold and skyrocket. Central bankers will have no choice but to hike rates so you can calm down this inflation. Now, inflation is just a word. There are many other concepts that are derived from the word inflation, and you're going to hear a lot of these terms when you hear about inflation or the economic climate. You got things like the opposite of inflation. You got deflation, such as in Japan, where prices are actually falling. But I'm going to explain deflation in another video. And deflation is more a mindset than a real economic state. You got disinflation, which is a fall in the rate of inflation. You won't hear this term too much in the near future because inflation is going to skyrocket. Which leads to the next term, which is hyperinflation. That was most evident in World War II, where you basically had to cart a wheelbarrow full of cash to buy a loaf of bread. They were sweeping money into the sewer. There was so much money out there. Hyperinflation is still rife today in places like Zimbabwe, where they've got I think it's a $100 trillion note that had to be minted just in the recent past. I mean, that $100 trillion note will probably only buy you a loaf of bread. And hyperinflation, it's unstoppable. When things start to run along those lines, it's unstoppable. And it looks like we could be heading that way if all these monetary policy keeps on is allowed to go on. And then I think the biggest worry for people, especially myself, is this last term, which is stagflation. Now, stagflation is not just a term to describe a rate of inflation or inflation itself. Stagflation is an economic dystopia. Stagflation is an environment where you've got high inflation, basically no growth, and skyrocketing unemployment. Can you think of a place where that's happening right now? That's right. Basically, every Western democratic society that's out there with loose monetary policy, that's what's staring them in the face. America, through all these QE programs, are barely managing 1.5% or 2% nominal growth. Take inflation into the equation, and you've got negative growth, negative real growth, despite all this money printing. So where would the economy be if all this loose monetary policy wasn't around? Oof, be dead. So stagflation, hyperinflation, they're the main concern right now within my investing insights. If you think that the central bankers are telling you the truth, think again. Look at the data, learn to think for yourself. Look at the rate of inflation when you go out and you spend money. So until next time, keep inflation in mind before you make any substantial stock or real estate investment decisions, because inflation is the one consideration that's going to get you crushed if you don't take it seriously enough. But anyway, until next time, happy investing.